Hello, my Teaserking family. How's everybody today? Last day of June, which means Basel 3 is tomorrow. Goody, goody, goody. That's what we wanted. Quick look at gold. It's up a little today. 32.88. I only got to 32.96, dropped to 32.75, 10 o'clock drop. And then, of course, it goes up if it drops at 10 o'clock, as it's doing. 32.87. Silver is holding 36. Basically, it's not doing anything right now, which is, again, answering the Mark McGuire question. If there's so much demand for gold and silver, why isn't the price going up? Because there's a disconnect. The normal free market to price an item, which means the more demand, the higher the price. There's no demand, the price goes down. It's not here. This is all price fixed by JP Morgan, Goldman Sachs, I guess Citibank is the bullion banks, basically. And I don't know why they're shorting it, and it makes no sense to me. Why you would short something that's heavily demanded is the stupidest thing you could possibly do. But the banks have been known to be stupid. Look at 2008, that whole crash. They could have easily seen it and easily avoided it if you just understood economics. 1997, Clinton says, oh, well, anybody can buy a house even if they have no credit. Well, that means it's going to crash. Well, the housing market's never crashed. The variable changed. Clinton said you have to give loans to these people who can't afford it. So, of course, they're going to default on it. But that never happened before, because before the banks controlled it, and they said, nope, you're not qualified for a loan, you're not getting one. So, of course, only the people that qualified for the loans could get the loans, and therefore it never crashed because they wanted the house. Here, some of the people were buying 5-6 houses. How are they going to afford 5-6 houses? You can't look at a house as an investment. It's an expense. Normally, they're like an inflation hedge. As the dollar loses value, they go up in value, but only because the dollar drops. Not like gold. Gold's going up because of demand. It's also going up because of inflation, which is money printing, which is the devaluation of the dollar, which means you need more dollars to buy things. But the things in certain categories go up because of demand. And if there was no demand for gold, it wouldn't be going up. I know it's hard. It's a hard concept for Egon and the alligator to understand, but that's the thing. And Egon with as well, they bought a suit in Roman times. That's just a stupid analogy. Gold's been undervalued, doesn't make it the value better now. Anyway, so tomorrow, Basel 3. Now, as Mark McGuire said, if they don't adapt to it, and they're supposed to legally, but they do what they want, it'll still go because of the Chinese will still sort of force the issue. Just a second. All right. So that's what we have for that right now. We've come back to it. Let's go to our baseball. I was worried about the Yankees under yesterday, but not for the reasons. The Yankees scored all the runs. Marcus Stroman with his 11 ERA, I think, gave up 1 or 2 runs. It was the Yankees. Aaron Judge hit 2 homers. So I knew it wasn't due. It was Sunday, and you just get different vibes. We'll be back on the under today. So let's recap. We had Philadelphia under 8.5. Ranger Suarez 2-1 game. The Yankees under 10.5. We just went 3 units just because of the streak. And that's how you got to bet. Now we lost. We lost one time. Were they due to score a lot? No, they just did. They had their shit pitcher and the other shit pitcher. Normally I would have bet the game over, but because of the streak, I bet it under. That's what you do with the streak. You keep betting red until black hits. Black hit. Now we'll wait and see. Tampa Bay lost, surprisingly, to Baltimore 6-1. We hit the Cubs under 8. They win. Miami over 9 wins, and Detroit wins. So we go 4-2 in our plays. We go 8 minus 5. We make 3 units yesterday, which puts us now at 34 and 11 the last week. That would be 622 to 629, 34 and 11. So we have figured out some things. We really didn't change much. We are looking a little bit more at streaks and cleaning the plate with these iffy games that we shouldn't be playing. So we're just eyeing the good games. All right. So let's see. June 30th. See, now we have enough data to really say this guy's a good pitcher or he's not. We'll be back to gold, 32.90. Silver, 35.95. Okay. Let's look at the market. The market should be getting killed, but again, nothing's free market in this situation. The market's actually up 175 based on nothing. China's dumping dollars. Japan's dumping dollars. We can't make sales. Gold-backed currencies is out in China. Who's buying stocks? All right, 6:30. We got first game is 6:30. San Diego at Philly. Philly's a big favorite, 220-9. Matt Waldron 0-0 with an 0-0, a new pitcher. And then Zach Wheeler 7-3 with the 2.45. Again, what do you do with it? You don't have data on the new pitcher, Matt Waldron. Let's take a quick look at him. Has he pitched before? Out of Big Nebraska. 2019, 18th round by Cleveland. He hasn't pitched this year. Last year he did pitch. He was a regular pitcher. I see a lot of 5s and 10 ERAs. Not a very good pitcher. ERA of 9. So he sucks. All right, so let's take Philly here. Zach Wheeler with the 2.45. So we'll take Philly for 2 units. Because we have Matt Waldron last year, we have enough information on him to see this guy sucks. So I don't know if he's been in the minor leagues or what he's been doing this year. We will see. All right, St. Louis goes to Pittsburgh. St. Louis is 110-9. Eric Fetty 3-7 with a 4.11. Bad record, good ERA. Andrew Haney 3-7 for 4.8. Pittsburgh we know doesn't score. St. Louis, they can hit. Pittsburgh can't. 2 weak pitchers. This is a game you just stay away from. So what I'm doing is weeding out my losers. Well, I would have bet it before, but I'm not. And off we go. And maybe we win it, maybe we lose it. We don't know. The Yankees in Toronto. Yankees minus 148.5. Carlos Rodon 9-5 with the 2.92. Max Scherzer 0-0 with the 5.63. Max is back. And Hey, he went to Missouri. This is interesting. He was first round pick by Arizona, and they let him go. Wow. All right, he pitched 2 games, 3 innings to Baltimore, gave up 2 runs, and 5 innings to Cleveland, gave up 3 runs. So he didn't pitch much. You go back to the Mets, he pitched 19, and then actually 27 in 2023. 2024, nine starts, and last year 2 starts. And his ERA 3.17. Last year don't count. 3.95, 4.12s. So we know he's a great pitcher with Rodin. Do they keep going under? Now, did the Yankees get hot, or they just played a terrible pitcher? This is the dilemma. With Scherzer, I'm going to go under with the Yankees. We're going to start a new trend, under 8.5, and we'll go 2 units because it's Rodin with a 2.92, and Scherzer, is better than a 5.63, especially it's the games in Toronto. Did the Yankees wake up? We'll see. If they start winning and scoring 8-9 runs, then we'll get off the under and we'll look for our new victim. Cincinnati and Boston. Boston 177.5. Chase Burns 0-0 with the 5.40. Garrett Crockett 7-4 with the 2.06. Cincinnati can hit the hell out of the ball. Garrett Crockett, you got to be careful. So it's not an easy, let's take Boston. So I'm going to lay off on it. Cincinnati could win this game. Probably goes over. We'll see. Oakland and Tampa. Tampa 170.8 in Tampa. Jacob Lopez 2-4 with the 3.56 against Drew Rasmussen 7-5 with the 2.45. Looks like an under in the making. Yeah, I guess we'll go Tampa Bay under 8, 2 units. I don't love anything yet. I haven't found my guy, but I am betting Scherzer and I am betting Philadelphia because the weak pitcher of who are they playing on San Diego. So we're betting against San Diego's pitcher, but we do have a good pitcher for Philly. All right, Tampa Bay. Baltimore, Texas. At Texas, Baltimore is favored. Trevor Rogers 1-0 with a 1.62 against Patrick Corbin 4-7 with the 4.24. Let's look at Trevor Rogers. He's played in 2 games. 6 innings, shutout Boston. 2 innings, gave up 3 runs to Tampa, and 8 innings, shutout Texas. A little bit of a mystery. So he's either very, very good or not so good. 3 runs. So we can see why Baltimore is favored. I'm gonna watch another game with him. The 49ers in Arizona. 49ers play under games. Arizona can hit. They did lose to Miami, who's not too good. Frisco 138.5. Logan Webb 7-5 with a 2.52. Ryan Nelson 4-2 with a 3.71. What should be an under. You got to be careful with Arizona. They can hit the ball, but they shouldn't hit this. So we'll go under. We'll go the 49ers under 8.5, 2 units. I don't love it because Arizona can hit, but Logan Webb with the 2.52 ERA should kill the hitting. In our last game, KC at Seattle, Seattle 167.5. Michael Wakaka 4-7 with the 3.33. George Kirby 1-4 with the 5.4. I'm not touching that. So our 4 plays: Philadelphia, going against weak San Diego pitcher. The Yankees under 8. We've got Rodin with the 2.92 and Max Scherzer, who we know is a hell of a lot better than 5.63. Tampa Bay under 8. We got Drew Rasmussen with a 2.54 ERA against 3.56. And we got the 49ers under 8. We got Logan Webb, 2.52 against Reed Nelson, 3.71. Those are your 4 plays. Philly, the Yankees under 8.5. Tampa under 8. Frisco under 8.5. We'll see if the Yankees got better or not. There was some news on some streaks I want to review. I was reading this morning. I didn't write it down. Basically, new streaks. Grass-fed hamburger. So here, Marcus Stroman, he only allowed 1 run. Aaron Judge hit 2 homers. It's a 12-5 game, ruins the under streak, but I don't know who was pitching to give Judge anything to hit. With that lineup, Judge shouldn't see a strike. The Mets hold player-only meeting after losing 12 of 15. So they're pissed off. Dave Parker's teammates, Hall of Famers, current Pirates. That's for you, Luke. Shotani completes 2 shutout innings against the Royals. Who gives a shit? Reds pitcher Nick Martinez nearly throws first no-hitter of 2025. Was it a fluke, or is he that good a pitcher? We'll find out. That's pitcher Griffin Canning suffers ruptured left Achilles heel. A lot of Achilles heel injuries going on. I wonder what that's about. See, I immediately think, why is everybody hurting their Achilles? Seattle Mariners star I never heard of. Major League's top power hitter, Cal Riley. Has anybody heard of him? I have no idea. Boy, there's a lot of bullshit. There was something, Jacob deGrom took a no-hitter into the 8th. He's cooking. Barry Bonds statue is coming. Brewers rookie Jacob Mizorowski dazzles again in much hype pitching. Never heard of this guy. Now, we're looking at pitchers every day. I haven't heard of this guy. Chase Burns' dazzling debut. A's break ground in Las Vegas. What's with all these teams going to Las Vegas? I don't get it. Something strange going on there. Why would you move to Vegas? Vegas is going bankrupt. Pirate star O'Neal Cruz benched for energy and effort. He hit into a double play and didn't run to first. So the Braves got Ronald Acuna back, so that'll help them. Maceland Wynn scored from second base on a sacrifice fly. It's probably terrible outfield play. Chase Burns strikes out 5. Yankees, including Aaron Judge. Keep an eye on Chase Burns. I don't know. I saw something on a streak, but I guess not. Let's go to the stats. Let's go to the standings. And we will see if there's any streaks going on there. Nothing. Cleveland's lost 4 in a row. And nothing in the American League West. The best Houston is 7-3. A bunch of nothings. Nothing to bet on. Miami's won 7 in a row. Let me pencil that in. So we'll be betting. I don't think Miami's playing today. Keep an eye on them. See, even though they're 37-45, they've won 7 in a row, 8 out of 10. They're hot. That's what we look at. There's always streaks. That's how I learned about gambling. I'll tell you in a minute. Milwaukee is 8-2, but they lost. I think they were on a big win streak, and they lost yesterday. Sunday, I'm telling you, is the killer. And nothing. And then Arizona's on a 4-game losing streak, and that's it. So let me explain how I learned gambling. My uncle was a good gambler, and I'm in Vegas, and he happened to be in Vegas at the same time. So I met him at wherever we were staying. We went to play blackjack. First, he pulls out a quarter and he flips the quarter. And it was a 2-headed quarter, but I didn't know it. And the heads came up like 10, 15 times in a row. Of course, it was 2-headed. But the point was bet streaks. Everything happens in the end, 50 heads, 50 tails, but you might get 10 heads and then 10 tails, as I say. So that's how I learned. He flipped it. Now it was fixed, but he fixed, he flipped it, which got me figuring out streaks. Then we went and played blackjack, and he taught me that increase your bet as you win. And when you lose, go back to 1 unit. So we start playing, and we are at some downtown casino, and I think I hit 13 in a row. I'm starting with $5, I believe, and I take out 60, so I get 12 hands, and I'm looking for a streak. And right away I catch the streak, and I'm up to 185. I play 185 a hand from 5, and I finally lose, and I win, I don't know, $500-$600. And that was the introduction to streaks and gambling. And this was in Vegas, and it was incredible because you would never have thought about that. I think what happened is I was playing, it was my first time there. I was just 21, and I was playing blackjack at the Maxim before it was torn down, and I was winning a lot, but I wasn't winning anything. I'd win 5-6 hands in a row at $2 a hand, and I'd lose, but I didn't understand the streak, and I didn't understand increasing the betting on the streak. So I'm hitting 5-6 hands where I should have made $50-$60, and I'm winning $10. Then I start losing, and I'm up $4. I'm going, fuck, how am I going to win at this? So I called, and I said, is Uncle Harold there? And they said, he's in Vegas. Because I called to ask him what to do, and he was actually there, and I told him. And so that's the key to winning, is you play your streaks, because you can win 5-6 hands in a row and increase your bet, and then lose 3 in a row. And so if I win, let's say it's $5, and I win 10 and 15 and 25, and I play it again, and 35 and 50. If I hit those, I'm up $75-$80. I've won 5-6 hands in a row. Then I lose. I can lose 3 hands in a row at $5 a hand. I lose $15. I'm up $50. Now that's playing $5 blackjack, but that's the idea. I can lose more hands than I win, but if I can catch that streak and bet it right, I end up winning because I go back to 1 unit as the bet. after I lose. So the Yankees, you can see I took them because of the pitching matchup, but I'm only playing them two. I'm back to 2 units. But I was smart enough yesterday. I didn't feel it to go back to 3 units. There was a time in Vegas when I was learning how to play craps, and the dealers were helping me, the stick men. And some guy gets hot. He rolls for 45, 50 minutes. I mean, just pass after pass. Again, I start with maybe $5 or $10 on the numbers, and this guy's hitting. And then um, I'm up to like $100 a number, but I'm too stupid to pull the numbers. Maybe more than 100. I don't know. Let's say $100 a number, maybe $150 a number, starting with 5 or 10. So I should be, and the guy keeps hitting numbers. And something happened. I looked to my friend who was at the other table, and all of a sudden I had the feeling we were going to 7 out. And I didn't know I could say no bet. I could have stopped the bet, and my action wouldn't have been there. But I didn't. And then I felt it, and he 7'd out. And I just looked at myself like, shit. Why didn't you pull your money? But I didn't. It was like one of the first times I was playing that I didn't know. But again, I was playing his streak. I was way up. I probably ended up winning like $700. I should have won 5,000, but that's okay. But it was a learning experience. And the stick man never wanted me to take my money down. They kept pressing it up, press it up. I said, well, let me have some of the money and press it up. But I had that gut feeling. In other words, I was in my trance, and I knew the guy was going to hit his numbers. And then all of a sudden, when I looked at my friend, it broke the trance. And all of a sudden I knew I could feel bad news. That's how I work. I can feel this stuff. That's why I show you that IQ video of me. It's not of me, but it is exactly me. And you just feel things, very intuitive. You ask questions, you solve problems. You don't get mad there's a problem. You try to solve it. I'm good. I'm playing Sudoku now, and it's like, it's frustrating looking for the number. You go, well, wait, I go to every box and I can't find or I miss one, or, whatever. But I've always been inquisitive to why, why is gold 2,000 an ounce? Why is gold not going up? Why is silver not going up? And the answer is obviously because the banks are shorting, because it's not free market, it's derivatives. And that's why I get frustrated when I hear these other guys and they don't know what's going on. They look at the charts and they go, oh, based on the chart in 2008, it's about to run. And I'm like, it's not going anywhere until the bullion banks let it run. Or China and Russia and BRICS buy a shitload of gold. That's how it's going to run. It's not, you can't chart it. That's why I get frustrated with these people that are supposedly intelligent financial people are just idiot salesmen. Most of them that you see are Andy Scheckman. He just runs a store. He doesn't know anything. He's not educated. Andrew McGuire and Alligator are both just bankers. They're not educated in economics. Egon's the one who gets it the best. He's the closest, but I don't believe he's an economist. You don't see a lot of economists do it, and that's why I stick out as I'm an Austrian economist. You don't see many of me. I'm a very rare animal because if you went to school, you learned Keynesian economics, which is government control. You very few learn Austrian or classical, which is looking at Adam Smith and figuring out, and Say's law, and a few other people ask me, am I like Hayek? And I go, no, I learned from Adam Smith. I didn't really learn from Hayek. Hayek might be Austrian, but I didn't pay. There's a lot of Austrians, but I didn't pay attention to them. I watched Adam Smith, and that's how I learned. But that's what you got to do. Anyway, so no real streaks. Just Miami's won 7 in a row, but they are not playing today. Let's see, anything else? I thought there was somebody on a streak, but All right. Wow. That's about it. Let's look at anything in the NFL. So I updated my stats in college because the quarterback changes. So I'm going to look at that. A lot of these quarterbacks are not very good. They switched from a MAC school or a Sun Belt to to a Southeast Conference or we were looking at the ACC, and they're terrible. So I'm going to mark that, and I'll let you know. Today, I definitely want to do the Big 12, which is the Big 16. We will see. Breaking news: Ramsey Smith traded to Steelers and look at the Steelers. They get Aaron Rodgers and they're going wild. Dolphins trade Jalen Ramsey, Jono Smith, Steelers for Minka Fitzpatrick. Who the hell is Minka Fitzpatrick? Sounds familiar. Let's see. I don't see much news in NFL. Let's look at college football. BYU quarterback Jake Retzloff reportedly transferring Wake of Honor coach suspension stemming from sexual assault allegations. He was a good quarterback, so I wonder where he'll end up. UNLV football moves Dan Mullen's debut up to week. So Dan Mullen, the old Mississippi State coach, is now the coach of UNLV. 5-star quarterback Ryder Lyons commits to BYU. After that, Notre Dame has the best odds of any team to go undefeated. I don't know who their quarterback is. Will Howard, Steelers, whatever. So really not a lot of news. Nebraska coach Matt Rule, quarterback Dylan could have taken the easy way out and entered the transfer portal. Who gives a shit? All right. So not a lot in football. Let's look what we did. YouTube, I was definitely seeing a lot. Here's the alligator. China and Japan exit U.S. debt. Well, we already know about that.
Countries such as China and Japan, who hold quite a lot of U.S. Treasury debt, are beginning to understand these debt trap dynamics. And they basically just don't want to get involved. They're not going to put any more money in. So the question is, do U.S. institutions step up to the plate and do something? And the answer there is, well, they can read exactly the same thing that we're discussing. So what are they doing? Well, it's all short-term finance. They're all going into T-bills. And the banking system, which doesn't actually like the risk in the private sector because it sees that the private sector isn't all that bright either, they're putting all their spare credit into T-bills. So it's all going very short-term financing, and they can't finance out along the yield curve. Now, this is leading into a rapid crisis. Countries such as China and Japan.
It's a crisis, says Alligator. Well, it all goes back to the dollar having no value. If the dollar has no value, why would you want to hold it? Would you want to hold a dollar? So you get your paycheck for, $5,000. Do you really want to hold the $5,000 or not? I would think not. I would think you'd want to turn it into gold or silver. That's the whole point. All right, let's see. So here's China destroys SWIFT. Well, we already know they're outside of it. China's digital yuan experiment. Okay. This is China doing CBDCs and everybody saying, fuck off. Nobody wants them in China.
When your celebration of life is prepaid today, your family is protected tomorrow. With us, you'll find patience, compassion, and attention to detail.
Seriously, I got to watch a 20-minute commercial.
Dignity Memorial provider. Find us at dignitymemorial.com.
Yeah,
We're at the scene of an epic battle between good and evil.
It's a car accident, Jamie. Good thing we have progressives.
And most surprisingly, China's grand experiment
All right,
with
this
the
is digital
yuan is
currency.
spiraling out of control. Citizens are rejecting it, merchants are ditching it, and the government is panicking. The very currency that was supposed to give Beijing total financial control is being pushed back by the people. And now, a wave of economic distrust is spreading fast. What was once pitched as the future of money is now triggering fear, confusion, and chaos. Why are Chinese citizens suddenly abandoning the digital yuan? Even under government pressure, what unexpected resistance is rising in cities like Shenzhen, Chengdu, and Hangzhou? And how is this digital currency backlash shaking China's financial future? To understand why the digital yuan is unraveling so fast, we have to go back to how this all began and what Beijing hoped to achieve. The rise of the digital yuan. They called it the future of money. Back in 2020, China quietly launched pilot programs for its new central bank digital currency, the ECNY or digital yuan. At first, it felt like just another tech experiment, a new app, a new payment method, another QR code in a country already dominated by mobile payments. But this wasn't just another payment method. By 2022, the digital yuan was rolling out fast, officially expanding across dozens of cities, including Beijing, Shanghai, and Shenzhen. Government workers were told they could receive part of their salaries in ECNY. Public sector students, same thing. Hospitals, train stations, town hall booths all began testing digital yuan infrastructure. The government framed it as a breakthrough. They promised a modernized financial system. They said it would reduce fraud, limit tax evasion, and help poor communities with financial inclusion. But behind the slick presentations and state media headlines was something else entirely. The ECNY wasn't just digital money, it was programmable money, designed to be traced, tracked, and even expired by the state. That means if the government wanted to, they could limit how long your money is valid, where you spend it, and even what you spend it on. Buy a train ticket? Fine. Try to buy cigarettes? Blocked. Donate to a protest group? Good luck. Transactions were no longer just private exchanges between buyer and seller. They became real-time data feeds to Beijing. The central bank could see every purchase, every moment, every transaction, instantly, and they weren't hiding it. In fact, officials bragged that ECNY would allow precise financial governance and social stability. At first, people went along with it, not because they loved the idea, but because they didn't have much of a choice. You see, the earliest adopters weren't tech-savvy volunteers. They were government workers, students on stipends, and employees at state-owned firms. In some provinces, even public school teachers were required to download the ECNY app or risk delayed wages. Banks started converting parts of users' accounts to digital yuan by default. Some citizens reported being forced to use the currency at public hospitals or train stations, even when other options were available. By 2023, the pressure was mounting. Posters appeared in subways. Join the future, use ECNY. Some cities even launched digital yuan lotteries, giving away free credits to incentivize use. But even with all the propaganda, subsidies, and government nudging, the mood was shifting. Throughout 2024, something subtle began happening. People stopped using it. Quietly, almost imperceptibly at first, merchants began turning off their QR code scanners. Customers started requesting Alipay again, WeChat Pay again, even cash, the old money the CCP had worked so hard to phase out, began returning to circulation. At first, the government chalked it up to technical hiccups. Then they blamed misinformation from foreign outlets. But it wasn't just foreign media. It was Chinese citizens themselves, posting on domestic social platforms, whispering in shops, even protesting at local banks. And now, in June 2025, the pushback has exploded into defiance. People aren't just avoiding the digital yuan, they're actively rejecting it. In rural Henan province, market vendors are refusing to scan ECNY apps. In inner city Guangzhou, delivery drivers are asking to be paid in cash or in Alipay. In Chengdu, a viral video shows a street food seller literally tearing down the ECNY payment board, shouting, "This money tracks us." The most shocking part? These aren't activists. These aren't political radicals. They're everyday citizens, housewives, merchants, students, taxi drivers, and it's not just them. In recent surveys conducted quietly by third-party researchers, nearly 70% of small business owners in certain provinces, including Sichuan, Shandong, and Fujian, say they no longer accept the digital yuan. Some even report that sales dropped when they tried to go ECNY only. The reasons vary: too slow, too invasive, too complicated, too many glitches, too much government. But the conclusion is the same: they don't trust it. One business owner in Suzhou told an online blog, anonymously of course, "They say it's safe, but if I buy the wrong thing, will I get flagged? Will I be blocked next month? I'd rather just use Alipay like before." And now the evidence is everywhere. QR code readers are disappearing from shop counters. Cash only signs are back, not just in back alley black markets, but in franchises, malls, and pharmacies.
Okay, so I think we got the gist. If it doesn't work in China, it's not going to work here because China's communist and the people are scared of the government and usually do what they're told, but they're like, screw you. So if I want to travel to Europe, it's going to, oh, you can't go. Or if I want to, buy certain things or stuff like that. Oh, no, you can't do that. I want to buy cigarettes and I don't smoke, but alcohol or something. Oh, no, you can't do that. This is what everybody's fear is the control aspect. Why the government's trying to control everybody, I don't know. But if the CBDCs are not backed by gold, they won't be around long anyway. But as you can see, it was the teachers, it was the public servants, it was the students. Those were the people on CBDC. So they said, oh, it works great. And as soon as the public gets it, they're going, not a chance. So I don't know if it's going to be, I don't think it'll be out in America, especially after this. But it does show you you're not stuck with it. You just sit there and say, I'm not using it. I want to use my cash and I want to use my debit and credit cards or my PayPal. And you should certainly be able to do that. So that I wanted to show you because I know people are afraid of CBDCs for the same reasons. Control. I don't want everybody knowing my business and the whole thing. And that's really the problem with it. The government can say, no, you can't buy that. Or imagine you're in Europe, you're on vacation in Italy, and you go using your CBDC, and it says you can't. You're in Europe, you're in Italy, you can't use it. That's why I just leave the debit and credit cards alone, leave my money alone, and let gold go to the moon. But I don't know why they think CBDCs are a good thing. We want to control everybody. Why? Why do you want? Is that government's role? No. Oh, it's the elite. They're trying to control everybody, and why? Give me a reason why it's a good idea to control people. You got nothing better to do? Worry about yourself. That's what Adam Smith, that's what Say's Law, that's what Austrian economics. I worry about myself. I don't worry about other people. That's why we're looking at Stoic and certain things like that. I don't want to get involved with that. The guy upstairs talking on the phone, I don't want to hear his conversation. Shut the fuck up. Or the music's loud. I don't want to hear your music. I don't want anything to do with you. Leave me alone, but I don't want to hear your bullshit. So that's a lot of what Austrian economics is, and it's laissez-faire. Leave me alone. No government. Don't need the government. We'll trade fine amongst each other because the competition will force everything to be fine. Right on eBay, if I cheat, I get a bad recommendation. If I try to sell fake silver, I'm going to get a negative. Nobody is going to buy from me. That's why you don't need the free market. You just need the competition, and you need people to say, hey, it was a bad seller. That's more than the government. So hopefully this will enable the U.S. to not go with this. And most countries, I think after seeing this, it's going to be hard to do it. I know it's an elitist thing, but we'll see what happens with that. I don't know what Genius Act is. So here, Trump crashes the dollar. That was in China.
With Medicare wouldn't qualify for this $25,000 final expense program. Turns out if you...
Trump just triggered the most dangerous chain reaction in modern financial history by trying to replace the Fed chair early. Within hours, the US dollar suffered its worst quarter in over a decade, down more than 10%, and Wall Street isn't panicking. But Beijing is celebrating, rolling out gold-backed contracts, ditching treasuries, and rewriting the global payment system in real time. The Shanghai Gold Exchange just opened a vault in Hong Kong. Foreign investors are lining up. And every dollar they don't use, that's power leaving Washington and flowing straight into China's hands. And now, Beijing's making a move that could end the dollar's reign as the world's reserve currency. For good. But this next move, it's the one nobody's ready for. The US dollar just hit a 3-year low, plunging 10.3% year to date. And it wasn't a rogue market glitch. It was a reaction to President Trump signaling he'll replace Jerome Powell months ahead of schedule, according to the Wall Street Journal. That announcement, before Powell's term ends in May 2026, has traders pricing in a near certain rate cut by the fourth quarter, despite 3.6% annualized inflation and no Fed consensus on easing. Rodrigo Catril of NAB warned that markets are effectively trading as if Powell's successor is already in control, triggering an accelerated sell-off in Treasury futures. Bloomberg data shows the dollar index dropped 1.8% in just 2 sessions after Trump's shortlisting comments at the NATO summit. This isn't policy, it's preemptive market conditioning. But if trust in U.S. monetary independence erodes before Powell exits, what happens when the replacement arrives? According to Reuters, foreign holdings of U.S. treasuries have dropped $194 billion since January, a scale not seen since 2015. That capital flight is directly correlated to falling returns, with the 10-year yield stuck near 3.97% and headline inflation still outpacing base rates. The real return on bonds is negative. Meanwhile, China's central bank has reduced its U.S. debt exposure to $775 billion. The lowest level in 14 years, citing loss of policy predictability, as reported by Nikkei Asia. Wall Street firms like Morgan Stanley now project another 5 to 7% slide in the dollar if Powell is sidelined early. But here's where it gets darker. A collapsing dollar increases import prices across energy and tech. The U.S. trade-weighted oil import index jumped 12.6% this quarter, which begs the question. If this is the controlled phase of decline, how much more uncontrolled does it get? The offshore yuan has strengthened over 2.4% against the dollar since April, while China simultaneously launched 16 new futures contracts for foreign investors, ranging from rare earth metals to tin, according to Zhengzhou and Dalian exchange filings. That's not coincidence, it's choreography. People's Bank of China Governor Pan Gongxing told the Lujiazui Forum that China's strategy is to create hedging tools that bypass Western financial systems. Beijing's expansion of yuan-denominated commodities trading, especially through the Shanghai Gold Exchange's new Hong Kong vault, has already registered $10.5 billion in activity in its first month per SCMP. That gold isn't just an asset. It's a trust instrument priced outside the Fed's influence. When a reserve currency's authority erodes, rival systems don't wait, they capitalize. But the next phase isn't gold, it's liquidity. And China's just getting started. In May 2025, U.S. goods exports plunged by 5.2%, led by a sharp contraction in industrial supplies and capital goods, according to the latest Bureau of Economic Analysis report. Even crude oil shipments, which used to be a pillar of U.S. trade leverage, fell by 7.1% month over month, kind of undermining the...
So we can see China's getting away from the dollar. Of course, we know they're buying gold, and we will see what's going on with that. Let's see. Alligator had one. Again, it's not gold going up. It's the dollar going down. It's going to blow my head up. We can't sell our bonds. I did show you the end of the Mark McGuire yesterday, where he's saying it doesn't matter. COMEX is done regardless. I showed you that. I can show it to you again if we need. Let's look a little of Alligator.
Did you know your phone has a hidden setting that could help you tap into extra
today.
income? A setting that big tech companies designed, but
these are very, very important changes, and I think that it's not just gold, and actually it's not just silver. It's the whole of the metals complex that is likely to be affected this way. So I think with silver having been left behind because it's been suppressed over a long period of time,
so it's
got to
gold.
the point where the gold-silver ratio was up at 106. It's now fallen down. It went down to about 90. It's about 93. I think that's going to go a whole load lower because people who've missed the boat in gold are going to say, well, silver hasn't gone up that much. We ought to get into that because look at the gold-silver ratio. It is still far too high. So that's, I think, roughly where we are. It's actually a very good outlook for the price of silver. And it's a turbocharged way, if you like, getting out of credit, getting out of fiat currencies.
As central banks and institutional investors quicken their shift to gold, the global monetary system is about to undergo a significant turning point. Financial analyst Alistair McLeod claims that growing worries about the soundness of fiat currencies and the solvency of the banking industry are the main causes of the extraordinary increase in demand for actual gold. McLeod highlights that this is a structural realignment of global reserves in the face of growing geopolitical tensions and waning faith in the U.S. dollars.
Well, to put it in English, basically, we don't all want to go broke. If you have $100,000 and you don't want to lose it all, you buy gold and silver. If you keep it in money, and the way the money's crashing because they're printing it, because every country's broke, including China and Russia and India, Saudi Arabia. I showed you that line, stupidness yesterday. If you understand that, it's, do I want to go broke? So anybody with a brain in their head's going, I don't want to go broke. How do I protect myself? And the answer is gold and silver, because they can't print it. There's always huge demand for it, and they can't print it. It's been suppressed by JP Morgan, but that ends tomorrow when we get Basel III, and then they won't be able to play their stupid little games. They'll probably try a little bit more, but at the end of the day, it's all gone. They won't be able to keep suppressing it by printing paper gold and silver. But we understand that's what's happening. We understand that's just about over, maybe another month, but it really should end tomorrow. But, they're going to play their little games. So that's really what's happening. You're buying silver not because of the ratio. I don't know. Alligator gets these things in his head like China is price fixing silver. It's not. It's the bullion banks. And this ratio is not a ratio that you're buying silver. You're buying silver because you have two lifeboats, because you're going to go broke holding dollars. So you have gold and you have silver. Those are your two lifeboats. And when gold gets so expensive as it is, and it's not even expensive yet, it hasn't hit 10 grand yet. When it hits 10 grand and people need precious metals, they're going to go into silver because, well, by then, let's look at it now. Gold's approaching 4,000. silver, hopefully we get into 40. Well, you're not buying silver because it's 10 to 1. You're buying silver because, or 100 to 1. You're buying silver because it's cheap and it's a precious metal and it's real money. So gold's getting a little expensive. I can buy silver. I'll buy silver. It all works as long as you're in either one of the lifeboats. That's what he doesn't get. He doesn't get it's gold's too expensive. But that's what you get when you're talking to an Austrian economist versus a banker. The banker looks at the ratio, and the economist, me, looks at, I got to get out of dollars. Gold's getting very, very expensive. Oh, silver's also a precious metal that's $1 that can't be printed. I'll go in there because it's so cheap. And when silver hits 500 an ounce, then it'll be, that's expensive because you're used to paying $30, $40 for it. But by then, gold is $5,000-$6,000 an ounce, and then you're going to say, yeah, okay, yeah, I guess I'll buy silver at 500 an ounce. Either way, you're fucked because your dollar's worthless. So you've got to, you've got to leave and get out of the dollar now. You don't wait. You can't wait till these prices go up. You'll be lucky if they'll accept them. So if let's say you're in Switzerland and you want to buy gold or silver at spot, they're not going to take it. They're going to say, no, I don't want US dollars. Nobody wants US dollars now. So that's the problem. Any BRICS country, you're not going to want gold or silver, or you're not going to want dollar. You're going to want gold and silver. So will people take the dollar? That's my biggest fear. If I wait too long and the dollar is already worthless, but the people don't understand it. Well, when my gold guy starts to realize the dollar's worthless, he's going to not take it anymore. He realizes, because he's kind of slow, what he realizes is, well, wait, I sell the gold and silver to pay my bills. And until there's another currency to buy my gold and silver with, or, so I come in and I give him, 3,500 US dollars for the ounce of gold. Well, he needs the dollars to pay rent because the rent's still in dollars. So as long as everything's still paid in dollars, he'll take dollars because he needs to pay his bills. Once that's gone and the dollar is no longer used, he won't do it. Hi, Share Gems. Welcome. I hope you have a good Monday. So that's what's happening. So I don't know if you're a gem store or not, Share, but right now I see why you have to take dollars, but I'd be very skeptical if somebody came in to buy gems or gold or silver and using dollars. You should be scared of that. But as long as you can get rid of them, then you do that. And if you have to pay your bills with the dollars now, you can't pay your bills with gold and silver. So I get that's what's going on. But that's my biggest concern is the dollar's worthless. I go to buy more gold and silver and I can't. And now I'm screwed because now I have dollars that are worthless. So that's why you don't want to hold too many dollars. You want to get them into gold and silver, not hold them. And then at the point where they say, hey, can't use them anymore. Normally, like what they did in Zimbabwe, when their dollar went to crap, they sat there and they said, okay, you can, we'll give you 30 days to exchange your bullshit Zimbabwe dollar for the new Zig gold-backed dollar. And they did it at like 1-to-1. So if you had 30,000 Zimbabwe dollars worth absolutely nothing, you could go to the bank, say, give me the Zig, give me the gold-backed currency. Here's 30,000. I get 30,000 in it, which was nice. So you should normally have like a month of time to realize you can't use it anymore, right? That's what you're realizing. So a little bit more of Mark, but that's really what's happening. He doesn't understand a lot of stuff. People call him really good, but when somebody like me who actually understands all this listens to him, it's very relevant. He doesn't. Like I say, oh, it's the dollar going down. No, gold only goes because of the demand for it. No demand for gold, gold doesn't go up no matter what the dollar does. If there's huge demand, gold goes up because of the demand, not because the dollar goes down. He misunderstands. I told him that when gold is $35 an ounce, it took $35 to buy an ounce of gold. Now it takes $3,500 an ounce to buy the gold. There you can see the loss in value of the dollar, which it's true, but he misses that 3,500. How did it get to 3,500? Was the demand for the gold. That's what got it going, not because the dollar went down in value. It now takes 3,500 to buy it. Well, how did you get 3,500 versus 2,500? Oh, because brics has been buying this shit out of gold and silver, and they're buying silver too. All right, a little bit more, Mark.
Future purchasing power, not just portfolio diversification. At the same time, the futures market is displaying red flags. Banks and other financial institutions are now exposed to counterparty risks that could become systemic in the event of liquidity stress due to the sharp increase in outstanding gold derivative positions. The European Central Bank has also warned about these risks in its cautionary notes, emphasizing that if delivery failures occur, the consequences would be felt across the whole financial industry. Please remember to like this video, subscribe to the channel, and enable post notifications before we delve further. Thank you and enjoy the video.
What could cause the next breakout, and how high could gold go in your view, Alistair?
Well, the way I look at it is not so much how high it can go, but how low the dollar can go. And in that, because really, it's not gold going up so much. I mean, obviously, gold has a volatility of its own, but it's actually quite low. But most of the move is actually due to expectations of lower currencies.
No, it's because of gold going up because of the demand for gold. You've got the two things. You've got the dollar going down, and so you're going to go broke if you hold dollars. So you got to get out of the dollars, which creates a demand for the gold, which makes the price go up. So how can he sit there and say, well, it's the dollar going down? If the dollar's lost 99 or 100% of its value, well, it can't go down anymore, but yet gold's going to go to 10,000 an ounce. Silver will hit 2,000 an ounce. Well, how can it do that? Well, the dollar can't go down anymore. So it's because of demand when people are getting out of dollars and going into gold and silver. That's the whole point of it.
Lower currencies in terms of their purchasing power. That's something which is really driven by foreign interest. Now, for some time, we have seen the People's Bank of China buying gold, but they're not really buying gold. What they're doing is they're dumping dollars. And I think if you understand that distinction, then
well, they obviously need to use dollars to buy the gold. So what the hell is he talking about? If I go to the grocery store and I buy steak, I'm not buying steak. I'm really dumping dollars. No, I'm buying steak with the dollars. I'm buying gold and silver with the dollars. That's what I'm doing, is I'm using the dollars to buy the gold and silver. He takes the simplest thing and he twists it, and this guy's an idiot.
You actually get the story. That's the whole point about what gold is doing at the moment. Now, we had a very interesting moment when I think it was just after Liberation Day, when we saw the dollar fall and bond yields rise. Now, I mean, this, as far as market participants are concerned, shouldn't happen. You know, if you get rising bond yields, you would expect to see the dollar rising. But what it was foreigners dumping US investments and dumping the dollar. And that was the key to it. Now, we've got a pause in that situation. And the pause, I suppose, is understandable given that Trump is backing off on tariffs. How much, we really don't know. He seems to have come to some arrangement with China, but we don't actually know what it is. But it looks like China's, if you like, control of rare earths has upset Trump's plans. But there is another thing in this, and that is that Trump is a spendthrift. He wants to cut taxes. He wants to eliminate income tax, indeed. I mean, part of it, his whole tariff plan was to return to the situation before the First World War, where there was no income tax, and the federal government, if you like, earned its revenues in tariffs. But that's no longer the global situation. The global situation is actually extremely dangerous. And I think what we're beginning to see is the global economy fraying around the edges. And I think we're beginning to see that, you know, from various other major economies, we're beginning to see them stall. But this is very, very important because as these economies stall, the US economy is likely to stall as well. It's bound to, for the same reason, basically because of the consequences of tariffs and responses to tariffs and so on and so forth. And what this means is that there will not be the increase in the revenue from the private sector to support the cost, just the interest, if you like, the accumulating non-paid interest on government debt. So in other words, the slightest hint of a recession and the US government is in a debt trap, which basically leads to bond yields spiraling higher. And I would argue that that is already the situation. It's just that people don't really realize it yet. But they will wake up to it. And at that stage, we will.
So would you want an IOU that I'll give you $1,000 for a bond? You pay me back in 5 years. Oh wait, you owe 37 trillion already, so I'm way in the back of the line. I'll never get paid back. That's the simple way of describing what he's talking about. So the debt trap is if you got 37 trillion, you can't pay it back. You can't inflate your way out of it. You can't print money. You can't print 37 trillion and pay it off. Because if you did, that 37 trillion would be worth 10 trillion. You couldn't print enough because you would lose value. If you were to print $10 trillion, it's only really worth 3 or 4 trillion. Well, how can it be, Howard? They're printing off 4 trillion because the value drops because they're printing too much. And that's what happens. So as you print, the value drops and drops and drops. And we got to print for everything we're doing. The Social Security, the Medicare, all the government workers that don't generate revenue, the defense spending, and the wars, and the interest on the debt. That's $1 trillion. Where are you going to get that money from? Where's the revenue come to pay that off? And as more people retire, and as more people as more people are losing their jobs, there's less taxes. AI is going to kill them, because if AI comes in and you lose your job to AI doesn't pay taxes. They haven't thought that through very well, have they? All right, a little bit more of alligator.
Have the situation again, whereby you see the dollar falling and bond yields rising. And they'll be talking about inflation, because what is inflation? Inflation basically is a fall in the purchasing power of the currency. So I
am shocked because he never said that before. So obviously he's listening to us, but he didn't say why. It's because they printed the money. Printing more money kills the purchasing power of the dollar. That's what he got part of it. The purchasing power of the dollar goes down, but it's because they print it. The more you print, the less it's worth, as I tell you, because you're not backed by gold. This is where the whole system's going to collapse, is they're not backing it by gold. If they would, we wouldn't be in this problem. But of course they're not. People are so fucked up about what is the purpose of money, why you can't have a gold-backed currency. But it's the only way to win, because otherwise you do what you're doing now and you print, you go into debt because you just keep printing for no basis. There's a lot of stealing going on, and then so you print and print and print, and then the dollar has no value. You can't just because you're the reserve currency keep printing. It still has to have value, and you're killing the value. But since every country's doing it, that's it. That's why you have to have a gold standard, because these idiots will just keep printing it to death. So you have the gold standard keeps the printing down, and you have gold to back the dollar. So the dollar never loses its value. What do we have now? The dollar's got no value left. All over the world, there isn't a country with gold except for Zimbabwe. So you see BRICS having gold-backed currency, or gold, whatever they're using gold to stabilize the trades. But yeah, and you see there's pushing a CBDC. Nobody wants it. Gold they all want in China. Funny how that works. All right, a little more with that.
It's a situation which, of course, markets do not expect. But even talk to people in markets, they're saying, we expect there will be 2 quarter-point cuts in the Fed's rates this year. Well, that may well happen, but if it happens, what happens to the dollar? is down the tubes. We go back to the dollar. The dollar is in a very, very bad position.
This is your final warning. The Gov owes you $5,800, but if you don't claim it, it's gone forever.
The dollar is in a very, very bad position. So one way and another, I think this is just a pause. The trend, I think, when it resumes, will be extremely upsetting for not only the dollar, but also all financial instruments, dollar-denominated financial instruments. And by the way, that includes the equity market, which was very, very overvalued relative to what you get in bonds, without bond yields rising any further. It's a very, very important point. And remember that on the US Treasury's own tick figures at the end of March, they reckoned that $17.6 trillion of foreign investments is in US equities. Are they going to hang around and watch this? I think not.
Silver has risen above the $36 threshold, something it hasn't regularly reached since 2011 and just momentarily previously in 1980. This breakout is regarded as a significant psychological and technical turning point for the market. It is bringing new attention to the significance of silver as a monetary asset, as well as an industrial metal in a time of economic uncertainty, ongoing inflation, and growing skepticism toward fiat currencies. Silver is becoming a popular hedging and value store for investors. With the gold to silver ratio lately reaching 106, silver has stayed comparatively cheap for years in contrast to gold. But now that it is in the low 90s, this ratio has begun to correct, suggesting a change in market sentiment. Silver is being considered as a catch-up trade with substantial upside potential by traders who are unable to participate in gold's robust rally. Recent policy modifications, however, point to a sea change. The Shanghai Futures Exchange is now permitting direct international participation without the need for local corporations, and the Shanghai Gold Exchange has declared its intention to create offshore vaults. Don't forget to subscribe and hit the bell icon to stay updated on our latest videos. We'd love to hear your thoughts in the comments. Now let's dive back into the interview.
And just your thoughts on the silver market in general moving forward. Alistair, I'll start with you.
Yeah, okay. Well, it's been priced only really as an industrial metal. And as an industrial metal, it has been suppressed. And I think that the governing party is China. Bear in mind that
it's not China, it's the bullion banks. I don't know where he gets his information from. The bullion banks have been holding it down because of their options that they have that they're shorting. How is China doing anything to keep the price down? So that's enough of Alligator. He just has so many errors that he just doesn't know. But, you know, I hate to burst your bubble, Alligator, but yeah, you're not all that. Let's see. I hate these videos by this guy. It's all planned for the end of June, and now it's all planned for the end of July. Oh, come on. There is a cartel in Mexico trying to sell that. What is that drug? And
all seniors on Medicare who haven't claimed their spending card load.
Uncovers cartel plot to kill 14 million with fentanyl. So the cartel in Mexico getting these drugs from China is trying to kill a lot of people. And I don't know, this guy did whatever, but good for him. You got to be careful with who you're listening to. I don't really like this guy. Insane panic ahead. China will make your gold and silver. It's not China, it's BRICS. Huge news from China, the big gold and silver revaluation. Okay, whatever. The unthinkable is going to happen. Well, only if you've not watched me in 5 years, it's unthinkable. This one's kind of hard. China announces a gold-backed yuan, which we've been waiting for.
This is just the way China just made a big move in the monetary system. So did we just witness a gold-backed yuan or renminbi? So this is what we're gonna be talking about today. First off, it's
This guy I don't like. I think he doesn't know what he's talking about, but we like the topic. He runs around in circles to try to get the answers. Like he's like Peter or Schiff, or Andy Scheckman, who just talks and they talk, but they don't say anything. So basically, it is a gold back one that they'll probably announce next week in Rio de Janeiro at the BRICS meeting in Brazil. But yeah, it is. I don't like when he says, "Oh, they announced it," and then he puts a question mark. Well, yeah, they did. So that's out or coming out, which is what we've been expecting. Again, this one is the secret path to a U.S. CDBC revealed. The problem is she's a Bitcoin person, so you can't really trust what she's saying. I doubt there'll be a U.S. CBDC because the banks won't like it. Because if you kick the banks out of it, the banks run the government. They'll never let it in. So I don't think that'll happen. I don't really get this one. Leave these states now. When the crash hits, these 10 states will go for. What does that mean? I mean, I know Michigan's in there. Well, what's going to happen? I'll still go to the grocery store. What's the difference? Hungary sounds like it's joining BRICS. Probably a good move. Get out of go where the gold is. Follow the gold. Trump crashes the dollar. Trump's doing everything he can to crash the dollar. China destroys SWIFT with $1.2 trillion in digital yuan. I watched this game. They got this out there now. They just go through the play to the next play to the next. So this is like 2 hours now instead of 4 hours. And it's by the NFL. And so this is Detroit, Houston. So all you people that like CJ Stroud, watch the game and you won't like him anymore because he throws a very bad interception and then he gets sacked a lot and his play calling is really weak. When the guy's wide open in a zone and he's crossing and you hit him, yeah. But when you get inside the red zone and when they blitz you, how do you audible out of it? That's always been my concern about these Ohio State quarterbacks and Alabama quarterbacks. They can't read a blitz. So they go back and they get sacked. And then how do they react with the sacking? So that'll get you off of that. And it'll get you off of Jared Goff, who threw 5 interceptions in the game. And the Lions just ran it down their throats. They didn't really pass it too much. China's about to be overtaken. Well, China's broke. We talked about the line with Saudi Arabia yesterday. This is bankrupting Saudi Arabia. You have all these governments doing this bullshit. They don't understand Austrian economics and Say's law. If I want to buy a yellow shirt, you sell it to me. You cannot sell purple shirts if I don't want to buy purple shirts, right? Or bright red, or there's certain colors people want, certain colors they don't. But the point is, you listen to what the market says, and that's what you sell. You cannot sell things that the market doesn't want. This wall you're spending $8 trillion on, that nobody wants. Nobody wants to live in the middle of a desert in a glass thing that goes up 100 meters into the air. Is there grocery stores in there? And how you eating? And the whole thing. Ski resorts in Saudi Arabia. Are there that many skiers there? Or everybody, let's vacation Saudi Arabia and go skiing. Yeah, you probably want to go to the Swiss Alps or the French Alps or the Italian Alps or something. Norway, Sweden. You're probably not going to Saudi Arabia. So again, he's doing things, spending money foolishly, and now they're going broke. No matter how much money they get from oil, look what Venezuela did. They were getting all their oil money, and now they're broke. You can't print money and print it and print it and print it. It does die. And inflation is not measured by prices year over year. That is not how you measure inflation. I'm not quite sure you can actually measure inflation. I don't know why they're trying to do that. You printed the money, the money is worthless. That's the inflation. The dollar's lost, $35 for gold is now $3,500. That's your inflation. Look at how much the dollar's lost. That's the point of it. Not 2% or 3%. Oh, inflation's only 2%. Yeah, I keep saying that, but that's not true. That's not real. You've printed the money, and it's really what's the value of the dollar. And I got to pay $5 for a can of tuna, and Lucky Charms is $6 a box. Probably the dollar's getting killed. Probably more than 2%. 2% would mean Lucky Charms would have went from $2 to $2.04. 10% would be $2.20. Right? $2, 10% is 20 cents. That's 10% inflation. I'm seeing the cereals go from $3 to $6. Probably go up higher. The answer, you just don't buy them. You don't need to buy cereal. You shouldn't eat it. It's all crap for you. It kills you. I don't know enough about this fentanyl. I can do some research on that. It's a drug that kills you, but I don't know. I think they put it in other drugs that are probably used by people who don't realize fentanyl is in it. This is why I don't take, the only drug I take is Tylenol and my colchicine for my gout, but there's no fentanyl in that. So I don't really know. And then I take my fish oil tablets, but I don't know what ingredients. That'll be a good homework assignment for me, is figure out this fentanyl and get back at y'all. But this is the problem. I mean, there's a lot of suicides are way up, and I don't know if there's suicides or kids taking fentanyl and don't realize it. And I tried to commit suicide. No, it fucking killed you. So I don't understand this need to kill people. It's crazy. Zuckerberg shatters silver price because he gets in with the defense contractors. I don't know what that means. Let's look at Egon.
What we're seeing now in the system and the problems we're having, we're coming to the end of a cycle. And that's a major cycle. And only historians will tell us afterwards the size of this cycle. If it's a 200-year-old cycle or a 2,000-year-old cycle, whatever it is, I think it's a major cycle. I think the crash or the fall of this system here will be serious because of the simple reason that the world has never, ever in history had a debt of this level on a global basis. There's always been continents before, or countries. Other countries could help out, but now it's the whole world, and therefore there's no one there to help. What we're seeing now in this
I'm sorry, wasn't that the Roman Empire who basically were the whole world, and they collapsed because they took the gold and silver out of their gold and silver, and their coins turned into nothing, and they went broke. And the Ottomans got the gold and they invaded them because soldiers don't work if they don't get paid. They're not going to die for nothing. It's funny how they'll die for gold, right? But there's no cycle. I don't know what he's talking about with cycles. It's basically you have gold. And so the U.S. has gold. Bretton Woods, 1945. There's no cycle. We got stupid and wanted to do these wars and healthcare and welfare and all this bullshit, paying people not to work. And basically, then we had wars, and then we wanted to spend more money than having the gold allowed us. And then we get off of gold. Well, that's not a cycle. That's just incredible ignorance. You cannot do that. You have to keep your gold. I don't know why you're running. He who has the gold makes the rules is because if you have the gold, you're fine. Nothing can happen to you. You can't lose. You can only lose when you get off of gold, and then you got the dollars, and then you increase the government, and you print more money than you have. The whole problem with government, as I said, it doesn't produce any revenue. So if I want to hire the Department of HUD and Department of Homeland Security and CTU and Jack Bauer, I want to hire this and I want to hire that and add this department. How are you going to pay for it? We'll just raise taxes. You can. If you raise taxes, you get less tax income and less people work, because if I had to go to work and pay 90% in taxes, I wouldn't go to work. I'd only keep 10%. Yeah. See ya. You'd go to a different country, or you'd go to a different place that didn't tax you at 100% or 90%. So what happens is as the times get good because of the gold, people come in and kind of steal it, and then the money gets printed too much, and then you have more government because you're strong because of the gold, and then the government can't fund itself because it doesn't generate revenue. So therefore it's just an extra expense, but where do you get the money for it? So it's like you want to go buy a Mercedes. Well, it's fine, but can you afford it? Well, I can't really afford it, but I want one. Well, okay, so that's government, right? I want it, but I don't have the money to pay for it. Well, you shouldn't do it. But this is the whole problem with the government. They keep expanding, but they don't know how to pay for it because they don't generate any revenue. And I think that's what these wars are about, is to generate revenue for the defense contractors. And they'll go to work and they'll pay taxes, and we'll grow the economy with the war because of the defense contractors, which makes absolutely zero sense to me. Doesn't work. I saw that CIA guy with the long hair try to justify that, and he's just dead wrong. You can't. Somebody has to pay the defense contractors. Where are you getting that money from? And okay, it's probably a little bit of people, but not enough. And then, so we have a war to generate sales. So we create sales that aren't there. So even the defense contractors making tanks and planes and missiles, is there a demand for it? Not really. You have to fake a demand for it by having a war. If you don't have a war, nobody wants missiles and tanks and planes. But if you have a war, now I need them. And that's basically what they're doing, is creating these wars so the defense contractors can make sales, because they're the ones who run the government. And so that's what happens. It's not a cycle. It's a lot of greed, and then they have a debt, and they want to pay the debt. They need to increase taxes, which you shouldn't even be using income taxes. That's one thing I do agree with, is the tariffs, but times have changed from the 1800s to now, where you can't just tariff. There's too much competition. You need to get rid of 90% of the government because it's doing things the government's not supposed to do. You don't need Homeland Security. You don't need the FBI and the CIA. You just need sound money. And, my 5 things: you need low taxes, you need free trade, which is the most important thing you can do, because you got to buy goods and sell goods to other countries who don't have. You need law, you need stable money, gold, and then you need good communications. You can't have a big government because you can't afford it. You can't just raise taxes to pay for the government. That's not needed in the first place. They don't build highways. They don't make dams. They don't do street repairs. That's not the role of the government. If there's money in it, then people can do it. It's like schools. There should be private. This is a school. Right here, I'm doing a school. Right? How much are you paying? Nothing. That's the point of it. So if U of M wants to charge $100,000 for an education, you're crazy, because you'll never get your money back. So that's the problem. So there's really no cycle in this. It always is going to happen when you don't back your money by gold. That's really the bottom line. So you must back your money by gold. And if you don't, you're going to go broke, It'll be worth zero, as has happened every time, according to Egon, which I agree. Anyway, so I got to leave Michigan because it's broke. Well, the whole U.S. is broke. See, this is why we buy gold and silver. Well, 32.97 is gold and 36.01 is silver. We might get we might get back into the 3,300s, which I'm sure we will. We buy gold because it's very limited and it can't be printed or counterfeited or inflated. That's why we buy it. It's a money. Since the Romans, it's money. It's got a good value. It's going up and up and up. The hardest part with gold is, let's say you need money. You don't want to sell it. I don't want to sell my gold ever because I know it's going up. And I'm sure there'd be a point if it makes sense to sell it at, let's say, 10,000 an ounce. You want to pay a bill, you want to do something, go on vacation, you sell an ounce and you go have a good time. But it's hard to, you know, Daria, I need money. And you're like, well, I got gold, but I'm not selling it. You know, so you got to be careful there. People don't realize it or understand it. Got to be careful because you can't lose with gold. That's why the countries who have gold are so strong. That's why BRICS. Why do you think BRICS is collecting gold and silver? Because they know it's very limited. High demand and very low supply creates high value. That's all it is. But this is not low supply. I'm not sure there's high demand. There's certainly not high demand in this anymore. Nobody wants it because A, it's been printed to death and the debt's too high. So people realize that it's just there's high debt and you've printed the shit out of it. And when they say you're going to inflate away the debt, they're out of the way. I don't understand that. What do you mean inflate away the debt? You're going to print money to pay off the debt? You can't do that. Or you'll print it so the dollar will be absolutely worthless. So is that what they mean? They're just going to print it and the dollar is worth zero. So the 37 trillion is now worth zero. Maybe that's what they mean by it. But you're not printing to pay for it. You can't because the money will lose more and more value. So that's what happened in 1923 Germany. They printed so much Reichsmark that it actually was wallpaper and worth nothing. And then they went to the Deutschmark. But that only lasted a few years because that wasn't backed by anything. This is just paper. This is worthless, both of these. It might have a 5 on it and a Parthenon, and this might have a $1 and George Washington or 100 with whoever, but they're not worth anything. They're just paper. The government backs it in that you go to the grocery store or go to the restaurant and the restaurant takes it. And then the restaurant takes the money and puts it in the bank and gets credit for it. That's what the government backs the banks to say, you've got to take the dollar. So the restaurant takes the dollar. But you can't destroy the value of the dollar, which is what you're doing as you print more and more and more of it. So I hate when they don't understand inflation. They don't understand, it's gold. It's not gold going up, it's the dollar going down. The demand for gold triggers the gold going up. Why did the Montana rookie card go to 110,000? Because the demand for Montana made the card go up. Even though you could say, well, the dollar went down and lost value, but It only works with the demand. So why aren't all baseball cards 100,000? Why isn't the Mantle card 100,000? It's 50 or 60. Why did the Willie Mays card is only 80 grand? Why didn't it go up? Why isn't that 100 grand? Because of the inflation. They don't make sense because they really aren't sure of what they're talking about. The gold is up because of demand for gold, period. The silver would be up, but because of the price fixing by JP Morgan and COMEX with all the paper derivatives, that's what's keeping that price down. The demand is surely there. The supply is surely limited. So that's why gold and silver are 10 times higher than they really are. But we've got to filter through that. And that's what BRICS is doing for us. They're saying, hey, we're buying all the gold and silver, and then you can keep the price down for us for a point, but now you can't, because now the price is we want a higher price because we've got a shitload of gold. China's got 60,000 tons. Okay, we're going broke. We need the price to go up. Same thing with Russia. Mr. Business. Hello, Mr. Business. You're a new one. You may ask anything you want. That's why I do a live class. So please feel free to ask, and I will do my best to answer. That's a long name, Mr. Business 1222. I assume that's your birthday. My birthday is March 7th. You can call me Professor. So feel free, Mr. Business. Go ahead and ask. Yes, sir. Go ahead. That's why I do these live. I really don't want the comments because you're doing a good job. Okay, thank you, but I don't have time to read. I don't need the what do you call it? The positive feedback, or what do they call it? I can't think of the name, but I don't need that. I know I'm doing good because of the people come on, the subscriptions are up. So I assume that I'm at 700 because people like what I'm doing, so I can judge it by that. Do you advise for trading? What would you like to know? I can tell you whatever it is. I would tell you to be careful of stocks because it's about to crash, because $17 trillion in the stock market's foreign. They don't want to be in the dollar. They're going to pull. And when they pull, the stock market's going to crash. Plus earnings are going to go down. What do you think about the gold after? What do you think about gold after 6 months? What should the price of gold should be at least 10,000 an ounce in a free market. So if it was on eBay as a free market and not everybody looking at COMEX price fixing it down, because that's what happens. COMEX is pushing the price down. That's not a real free market like the Montana rookie card. He's 110 because there's nobody pushing the price down. That's what the market says. So gold, you can't go wrong with gold. I think gold should be at least 10,000 an ounce, probably higher, and silver should be 1,000 an ounce at least. And once people, now here's the kicker. So I use the Titanic a lot. Everybody, well, it's unsinkable. So people think the Titanic can't sink. It hits the iceberg. Well, it's unsinkable. It can't sink. The water's pouring in. The boat's going down deeper and deeper in the water. And then finally people realize, oh shit, the boat can sink. What do? They get into the lifeboat. And then you can see there wasn't enough lifeboats, but that's how you avoided it. We haven't even seen this happen yet. People really don't realize these are both bankrupt. They're both worthless. Not only this, the Swiss franc, the Chinese yuan, the Japanese yen, the Indian rupee, pick a country, their value is gone. Venezuela, Sri Lanka, Greece, Turkey, they're all bankrupt because they keep printing and printing and printing their money. But people don't understand it yet. So the frenzy you had at the end of Titanic, when people are realizing, oh shit, the boat's sinking, and they all at once try to jump into the lifeboats, is what you have here. People, oh, the dollar, it's the reserve currency. It's such bullshit. You printed $150 trillion of these. There is no more petrodollar. And the FX is people aren't trading in dollars anymore. So not only can you buy oil in China, in Chinese currency or Russian currency or whoever, you don't need it to trade between Russia and China. They don't need to buy US dollars. So all that dollars is coming back as people realize we're broke. Then the mass frenzy will hit gold and silver. It hasn't hit yet because people don't understand the dollar's gone. The euro's gone, the Swiss franc's gone, the British pound's gone, the Canadian dollar's gone. They don't realize all these are bankrupt because they keep going, well, how can it go bankrupt? Well, you hit an iceberg, the boat's going to sink. So you keep printing the money is worthless. So that then creates a huge demand for gold and silver because those are the only two lifeboats. So as people start figuring out, and you're ahead of the curve because you're listening to me, as you figure that out, the frenzy goes and jumps into gold and silver. And that hasn't even started yet. Who knows? Gold could be 30,000 an ounce. Silver, I mean, I'm conservatively saying gold at 25,000, silver at 2,000. That's conservative. But I am using the frenzy of the Titanic where they all are trying to jump in the lifeboat. Here, the lifeboat's gold and silver. So that's the frenzy that hasn't happened yet that most guaranteed will happen. Is it possible prices push to 10K? How is it possible? I just explained that. Absolutely. Well, because tomorrow we're supposed to be getting rid of, we're supposed to add Basel III to COMEX. COMEX is a price fixing model where JP Morgan and Chase and Goldman Sachs and Citi use options and derivatives to short the market. They say, well, it's going to go down, but they only use 4% gold and 96% toilet paper. And that's supposed to end tomorrow because they are going to, okay, I'll make the trade, but you know what? I want delivery of my gold and silver. I want you to give me gold and silver for the contract, which hasn't happened in the US. It has happened in Europe, and that's why you see $3,400 gold. Silver is not Basel III yet, and I believe it's supposed to be gold and silver tomorrow. They'll have to come up with the physical and get away from the paper market, and that's where we're at, where the physical market by China and Shanghai and Russia and Dubai are going to take over and not allow this bullshit because they got all the gold. They want gold at 30,000 an ounce. It helps them if you have the gold. The U.S. doesn't have any gold because we're run by a bunch of idiots, and therefore we don't have gold. There's no gold in Fort Knox. The only gold was Jeremy Irons and Die Hard 3. That's the only gold we had. So that, and you notice Germany and Italy just asked for the gold back because they don't trust the U.S. to not use their gold. So gold price is going to go up. The dollar is going to go out. So you're going to need gold to survive anyway, because you'll go to use the dollar. The dollar has been printed so much. It's 1923 all over again. The Bundesbank dollar is worthless. You wallpaper your wall with it, and you need a wheelbarrow. So you're just ahead of the game buying the gold and silver, and don't really worry about the price. Your first thought is get out of the dollar before it collapses and you've got 200 grand in the bank's worthless. That's your first thought, to get away from that. And your second thought is, gold's going to go up in value also. So you get a kicker on it. How possible? Very possible. I'd say at least 90%, because as I said, once you get the frenzy into it, all the people realizing the Titanic is sinkable. Once you get people to realize the dollar is collapsed and all the other paper dollars are collapsed, there's only one choice. You either go into gold or silver. I mean, the same choice. You go into precious metals. Bitcoin is priced in dollars. So what's the value of Bitcoin when the dollar goes to zero? Zero. Bitcoin is not real. If it is, show it to me. You can't. So Bitcoin is a digital currency, not backed by anything. So it's really worthless. It's priced in dollars. But again, what does that mean? So if the dollar is zero, $100,000 Bitcoin's worth zero, because if you have to use Bitcoin to price itself, you can't. It doesn't exist. It's not backed by anything. Gold, you don't need priced in dollars. Gold is gold. Gold is its own money, not priced in dollars. So you don't need it priced in dollars. Gold will take on its own value. Sort of like a Rolex is worth X, or it's priced in dollars, but it'll be priced in gold. The Mantle cards, Tom Brady cards, Jordan cards, they will just get priced in gold. It just switches where gold's the money and then everything's priced in gold. But they don't want that because they can't steal the dollars and they lose control because gold's freedom and they don't want us in gold. But if you're smart, you realize that's the only place to be. Who controls gold price? Who can manipulate gold price? Well, COMEX is run, there's 8 bullion banks in London and the US. So here we got 32.94 gold. These are paper options going up and down. It starts with Asia at like 6 o'clock at night till about 2. Then it goes to Europe until about 9 o'clock. And then the US enters the game about 9 o'clock. So you can see China pushed it up, Europe pushed it down, and the US is pushing it up. 32.94. They control it as options based on the 8 billion banks. I think there's a couple in London or Europe, USB, HSBC, JP Morgan, and Goldman Sachs, and Citi. I think there's 4 in the US, and they simply bid it. But on the other hand, on the other side is BRICS, China, Russia, Saudi, India, buying the gold. So if you make the price too low, they all come in and buy it, and they buy the contracts. If you've ever seen Trading Places with Eddie Murphy and Dan Aykroyd, you remember the orange juice scene. I have it if you want to watch it. It's about 5 minutes. And what he does is the price goes up and then they sell it. They sell in options, you can sell first, hope the price goes down and buy it. So they sell at 142 and the price goes down. They say the crop report and then everybody sells and it goes down to 29 and they had bought it right around 40. So they bought it second at 40 and sold it first at 142. Let's flip it around. I buy it for 40 and I sell it 142 is what they actually did, but they did it out of order, which is totally fine. So they're in a pit and they're the ones who are trying to control the gold and silver price, but you can't, because what happens now is you go, well, okay, I bought it. I want to take delivery of it. So you're doing the sales. So JP Morgan's selling gold at 32.95 and China's going, okay, I'll buy it from you and I want to take delivery of it. And now JP Morgan has to find the gold because they're taking delivery of it. And that's how you stop the shorts. So that's why, as our favorite people are BRICS, because they're the ones going on a gold backed currency, because they know any other dollar will go to zero and they know gold is king. It's the golden rule. Rome was fine when they had gold and silver until they got off of it. The same thing with France and England and Spain. And that's what's happening here. We're off gold and we're done. We're toast. And who's going to win? BRICS, because they're buying gold. And what we're doing is, by lowering the price, they're just going, great. They lowered the price. I'm going to buy more. So what we're doing is backfiring, because we are selling the derivatives, not the real gold, the paper gold. And that's why I refer to it as paper versus physical. If you buy, you must buy physical gold. You must go to the coin shop, the jewelry shop that sells it, and give me physical gold. And don't worry about the price. There's a little premium they add. Part of doing business. If you want it, you got to pay the premium. There's no way around it, which is fine. I bought most of mine about $1,700, $1,800. I bought a little bit at $2,500, but mostly by 2000, I was pretty much all in. Nothing in the stock market. I have nothing in the bank, but a few when I get my Social Security, it goes into the bank. That's about all I keep in there. And that's what happens. So they're the ones manipulating it, but they got caught with their hand in the cookie jar because you're allowing BRICS to buy it cheap. It worked since 1971 because nobody was buying the gold and silver. But when BRICS comes out, they sit there and they going, oh, why don't we buy the gold and silver? We can see the U.S. is collapsing after 2008. So since about 2010, 11, they've been buying it. You've seen the gold price go from 1,000 up to 30. We're call it 3,300. So to look at a chart, I mean, look at 20 years. It's up $2,800, 656%. Stock market's not up that high. Let's just look at a year. It's up $940, 40%. Right? The stock market, if we look at stocks, stock market's up $43,000 somehow. But if we look at for a year, it's up 12%. So everybody says stocks this, stocks that. It's up 12% in 1 year versus gold at 40%. The stocks are about to crash, but you can see the chart. So you can see it's been bought, especially the last 5 years, it's up 85%. 20 years, I don't know what it was at 20 years ago. It's 2005, it was probably $300, $400. Well, we can see 2,800, we're at 3,300. So is it about $500 an ounce? You can see it's done nothing but go up. 30 days is a minor hiccup, but if you go 6 months, you made 25%. You have no fear of gold or silver going to zero because you can't print it. It's the perfect money because you can't inflate it. Inflation's printing the money. It loses value. And you need more dollars to buy goods and services. That's what inflation does. That's why when you go to the grocery store, everything is more expensive because the dollar's worth shit. We know what's happening. Most people don't. Oh, I can't believe Oreo cookies raised their price. Those bastards. Oh, Cheerios raised their price. And, Fruit Loops raised their price. Coca-Cola, no, the dollar is worthless. And so they're just all raising their price. Even broccoli and cauliflower is up. Apples, $2. They were never $2 for an apple. So you just go down the list and you see everything's priced much higher. It's really the dollar that they're printing the fucking thing to death. You got a $37 trillion debt. So you're fucked. You can't pay that off. How can you pay off 37 trillion? How could you let it go to 37 trillion? Because we got a bunch of idiots running our country. That's our problem. Now, if we want to sleep well at night, as we do, we buy gold and silver. Not only is it freedom, it can't go down. And if we hold 200,000-300,000 in cash, how well are you sleeping as your dollar is worth nothing? I have a picture here of the grocery store. Let's see if I can find it. It's a shopping cart. Anyway, it shows you the different times. Well, the point is in 1970, you'd fill your cart for $20. And about 1990, you'd fill your cart halfway for $20. And now you put 5 items in your cart for $20. Well, what's changed? You're still buying, but it shows you the value of the 20 went to nothing. So you go and now you buy a steak. I was yesterday looking at steaks. They were like $17, $18. Okay. It's just because the dollar's worth nothing. Steaks didn't go up. I mean, nothing. That's kind of where Alistair's trying to say is, it's not gold going up, it's the dollar going down. But he's wrong. It is gold going up, because just because the dollar goes down doesn't mean everything goes up in price. So that's what's happening. What if all countries start digging gold from mineral and suddenly supply of gold increases, demand decreases? Then what happens? Okay, that really can't happen. They've dug all the gold out. Okay, let's say there was a new find in Colombia, Argentina area, a couple 100 tons. You dig it out and that's gone because the demand is much more than the supply. So let's say, for your example, that everybody's digging in their backyard and everybody's finding, 20 tons of gold, more than that. Tons, 32,000 ounces. So let's say everybody found 1,000 tons of gold in their backyard, which isn't real. It would take you years to mine it, right? You can't just dig it up and go mine it. Like this thing in Argentina and Colombia, they gotta figure out how to get it out of the country. Is there more gold in the ground? Possibly, if you can find it, but that doesn't mean okay, you will increase supply a little bit, but not more than demand. You'd have to find like 1 million tons of gold. But would that stop you from buying gold? I'm not sure. The clear cut is the dollar's worthless. They keep printing it to death. 1923 Germany. That's what they're doing. They're printing it and printing it and printing it, and it's worth nothing. How are they going to pay for the big government? How are they going to pay the $1 trillion they owe on the debt? How are they going to pay Social Security, Medicare, and all the government employees? Because you've added so many government employees. And how are you going to pay for the military complex? So you've got to pay for all this. Where are you getting the money from? These are all costs. There's no, I put my money in for my Social Security. I should have my own professor account and I should be able to have 300,000-400,000 in it, but I don't, because they gave it away and then somebody else is paying me. It's the stupidest system I've ever heard. Let me take care of myself. I don't even need Social Security. If you would have let me keep my money, I would have bought a lot more gold with it and I'd be fine. But, that's what we're dealing with, is a bunch of idiots. But can that happen? That happened in Spain where they stole all the gold from the Incas and the Mayas in Mexico, and they brought all the gold back to Spain. And there was a little of inflation, but because it wasn't worldwide, it was only in Spain. And they just partied and had, I got all this gold. And basically everybody turned into vegetables. Nobody worked. Nobody did anything until they ran out of the gold. But that's happened once, but you're not going to find another Inca, Maya, all this gold in Mexico. So the odds are zero that it can happen. People, I mean, why am I in it? Because I know the dollar's worthless. So I'm protecting myself by getting out of dollars because I know they have no value. What can I get into? Well, I can't get into euro, Swiss francs, British pound, the yuan, the yen. There's nothing to get into. All the dollars are worthless. So that leaves me going, where do I put I got to get out of dollars. Where do I put the money? So I get 200 grand from the bank. Where do I put my money? And the only answer was gold and silver, because it can't be inflated. Okay, they do find some. There's so much demand for gold that you'd have to dig up a shitload. And would it be dug up tomorrow? Or or more than likely over the next 10 years. So is that going to really make the supply that much bigger that the price goes down? And it just wouldn't, because the dollar's gone now. You're not waiting 10 years for it. So I don't see where there would ever be a case that people get rid of their gold. Oh, there's too much of it. It just isn't happening. Like I said, there are some fines, but you got to realize if they find 1 million ounces is only like 10 tons. There's 200,000 tons. Let's call it 205,000 tons in the world. All right. So at 32,000 ounces to a ton, and they find 1 million ounces, that's only maybe 10 tons, if that. That doesn't do anything, to the price or anything. And since we're not on free market and we're on price fixing on paper, it really would have no effect at all. But as long as brics keeps buying and then there's just more to buy, that would be fine. While dollars is worthless, it means all big company stock of America market will crash like Apple, Nvidia. Exactly. How are you going to make profit? Now, if you deal internationally, maybe you will, but see, as you lose money, the money goes down, you're going to get laid off of your job because we're going to be in a massive depression. So companies will not make sales. So let's just put it that way. Sales have to drop. Well, what happens to the stock price? It has to drop. Because stocks are based on future earnings, right? Oh, everybody's going to, there's AI, everybody's going to AI. And okay, I don't know. I really don't know what it is, and I would never use it because I want to think for myself. I don't want a computer thinking for me. I want to think for myself. But with that said, sales will drop because businesses are going to get hurt. The tariffs are killing Ford and GM, for example. The costs go up of the companies. So whoever's selling them steel, their costs go up. Well, they can try to pass the cost down, but it doesn't mean they can. On the other hand, if they want to stay in business, they have to pass the cost on. But if there's no buyers for it, it really won't help them. But Ford and GM might have to pay more for steel because they have to look around who else sells steel that they can buy it from. And it's not just going to be me and you are going to put up a steel company. It takes 10 years to do this. They can't just do it. So what Trump's doing is he's only got 4 years to do it, and then he's gone. And then whoever comes in next will probably reverse a lot of this shit. So we're really fucked. But you buy gold because it can't lose value, and it's suppressed, so it's worth a lot more. And you can't hold dollars because of that. So the stock market should crash. There's 17 trillion in foreign investors in the stock market who will pull their money out because they see the dollar 37 trillion in debt too. And they go, I don't want to keep my money in dollars. So the Germans and the Chinese and the Russians and the Indians and the Brits pull their money out, and they probably put it into their own currency for a day and then buy gold with it because they realize, oh shit, my currency is not worth anything either, because everybody's playing off the same Keynesian playbook, which is, I'll print money. I'll just keep printing money and paying for the debt and paying for bigger governments. And, we need green energy and we need this, that, and the other. So basically, it's the same thing. And as government gets bigger, they don't produce revenue. So you end up printing more money, which makes the money worthless until everybody's broke, which has happened since the Romans. It always happens. All the dollars go to zero because you got to print them to pay for the big government and pay for the social programs that people should work, and then that's how they live. You don't get handouts. I don't consider Social Security a handout. I paid into it a lot more than I'm getting out. But that's the problem. And I wouldn't have done it because I had to. So the stock market will crash. The bond market's already crashed because why would you buy a bond? That's an IOU. So if I bought a government bond for $10,000 for 5 years. Am I going to get paid back? How the hell am I going to get paid back? They owe 37 trillion out there. How am I going to get paid back? I'm in line behind 37 trillion. So the bond market has no value. China's dumping, Japan's dumping all the treasuries, which they got in the trade. There is no such thing as a trade imbalance. We bought Nike from China and we paid them in cash. There's no trade imbalance. We gave them money. They gave us shoes and shirts and glasses and computers and iPhones and chips. But we paid for it with money. That's the other half of the trade. If I trade you a Mickey Mantle card, you give me $50,000 for it. I don't expect you to give me cards. You gave me 50,000 and I got the mantle. So I traded you the mantle for the money. We both are happy. I wanted the money more than the mantle. You wanted the mantle more than the money. Nobody got screwed. Everybody's happy. So we might negotiate the price a little bit to make us both happy, but that's it. So it's really, everything Trump says is dumber and dumber and dumber. It's not all big companies. It's all companies. Well, it's companies with stocks. Yeah, they'll all crash because they won't make earnings. Does a Microsoft still make earnings? Maybe. But if we don't have money to buy things, how can the stocks make earnings? And therefore, why would the price go up? So right now, I think the reason the stock market's so high is the 401ks. So you go to work, you have a 401k, and where does it go? Into mutual funds, which are stocks. The company matches 5%. So you're happy. You go, oh, I got 5%. And every payday, you get more stock and the company matches and it goes in. And that's why the stock market keeps going up, because people think that their stocks are okay. They don't realize their stocks are in trouble. And you got your money in the bank, you don't realize your bank's in trouble. Don't keep a lot of money in the bank. They're going to close it on you and you're going to go, I want my money out of there. You can't get it. Do not leave your gold, silver, diamonds, mantle cards, anything with value, Rolexes, in a safety deposit box in a bank. Don't do it. The bank, you got to realize, closes. You can't get in. Well, I got my safety deposit box in there. You're not getting in. You're not getting your safety deposit box when the banks close the door. Understand that. So don't leave it in a bank. Leave it and go buy a safe, put it in one of these moving things where you can store your stuff, storage wars or whatever. Just put it in there in a safe, and then it's safe, because they'll never close the storage wars. They will close the banks, because the banks are in trouble because of all the loans they've got that they'll never get paid back on, and all the derivatives that the bank has, shorting gold and silver. So that's more the bullion banks. There's mortgages that won't be paid, because as people lose their job, they won't have mortgages. They can't pay them. Who gets hurt? The bank. The bank's relying on this $1,000 a month for the mortgage, or $2,000 a month they're not going to get. The banks don't want to sell houses. They want to get their money and loan the money out. So there's a lot of problems that are here that gold solves. Gold and silver solve all that. Nobody can take your gold. You got physical. You've got it in a safe place, in a safe, not a government place. You're not in money, paper. You're in real money, gold and silver. And you sleep well at night because you're not going to wake up, and it can never go to zero, because BRICS is sitting there with 60,000 tons for China, 25 for Putin in his swimming pool. You got 30,000 tons of India. Saudi Arabia probably has 25, 30,000 tons. Brazil and Dubai and all these countries joining BRICS have to have gold. Poland, Czechoslovakia. So there's a lot of countries buying gold, and there's not a whole lot left. But then it's not going to go to zero, because this isn't a US thing. This is a worldwide thing. This is US only, the US dollar. And this is euro only, the euro. But gold is all over the world. If you notice, it's a spot price of gold. It's 3,300. That's the price of spot of gold. Now, the things I do recommend is, if you are buying gold, to buy these are what you should buy. So you can buy eagles, you can buy buffaloes, which are US, you can buy maple leafs, you can buy cougarans. Where are my cougarans? You can buy a cougaran, you can buy a philharmonic. So any of these will do. There's the philharmonic on the bottom with the violins, the maple leaf, the US. The one thing is, it's got to say 1 ounce fine gold. Sometimes it has 999 on it, but you're looking for something that says 1 ounce fine gold, has the amount on it. That's what you want to. That's what you want to get. US 1 ounce fine gold. Forget the $50. 1 ounce fine gold, United States. And in the United States, it doesn't say 999 on it like some others do, but it's 1 ounce fine gold. So that's what you want when you buy, is any of those. And save it silver. As long as it says 1 ounce silver, 999, you buy it. I go to a store where I know the guy checks everything out. He buys from people, so he checks it out before he puts it out. So I never have a worry, but I go to the same guy. Be careful, guys on the street. Be careful of gold and silver coming from China. That's silver's like what, $40 an ounce on eBay, and somebody sells it for 20. Yeah, don't buy it. It's not real. So don't lose your mind and say, "Oh, I'm getting a sale." Nobody in their right mind selling you $40 an ounce silver for $20 unless it's fake. So that's what you need to do. Do you have any trading strategy for day trading? I do for gold. I used to do a gold stock Newmont mining. And if you look at what's going on in gold, so you notice this spike down at this time's at 8 o'clock. Usually it's 10 o'clock. So you see the 10 o'clock spike down? That happens automatically every day. 99 days out of 100, it goes down at 10 and then goes up. Once in a while, it won't go down at 10, but 99 out of 100. So what I used to do is be in Newmont mining, and this is every gold stock does the same chart as well as gold. And I'd wait for it to start going up. So as soon as it starts, so if it's going down, boom, 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 and it's just about 10. So I'm watching it. I'm waiting to buy. Then it starts going up. And as soon as that algorithm starts moving up, I let it go up, for a few minutes. Then I buy it. And then it gets up to the top. And then you can see, oh, boom, boom, boom. Okay, right there, I might sell it at 32.96. And I would have bought it at 32.80. But what I did was, in Newmont, I bought 1,000 shares. So it was like $50,000. So I would buy the 1,000 shares. It went up 70 cents. I made $700. I was happier than hell. If I do that every day, I'm going to make some serious money, which is what I did. And all you do, 9 times out of 10, it does this. Wait till it starts going up, and then let the algorithm buy it up. Now, there was two problems. One, it didn't drop, so I didn't get in. Two, it dropped, then it started to go up, and then it double dipped back on me. And then I'd have to hold it for a few days because it wasn't a good boy, where the algorithm somehow got stopped and went back down. Well, then I got, I got delayed, and then, I had to wait till the stock hits that point again. And again, it's all fixed. It's not free market. That's the most important thing. What's free market? If I put my Canadian club on, if I try to sell you this, that's free market. I'm a seller, you're a buyer. That's what a free market is. Is there a market? If nobody wants to buy it, there's no market. It's worthless, even though there's whiskey in here. On the other hand, if I put it out for $100 and you buy it, that's the price of it. We figured out the market's $100. In gold, it's not a free market. It's all derivatives. So because it's derivatives, we don't know what the real price is. As I say, the price of gold is here. The COMEX price is here. We don't know what this is. My guess is at least 10 grand. But as everybody gets off the Titanic and starts panicking, it'll be 25, 30,000. But you got to wait for it. It won't just go. Silver, the same thing. Silver's 2,000 an ounce, but it's never been above 50 because it's been price fixed. It's been controlled by the banks and doing these shorting. That's why it's never been over 50. But if gold's 3,000, silver should be at least 500 minimum. And forget this. They're keeping the price down for the missiles and what they use it for. Forget that. That doesn't matter. They would use gold, but gold's $3,300 an ounce. So day trading, it's all, you've got to look at patterns, but you need to understand is why. So what's going on here? We know it's derivatives. So day trading, it's very dangerous because you must understand why it's being bought and sold. You must also understand it's fixed. You got to be careful with the price fixing, right? It's still, Blue Star and Michael Douglas and all that. So they do control the price on you, and they're buying it and then they're announcing it. So JP Morgan will buy a bunch of Microsoft, and then they'll say, hey, we're putting a bid on Microsoft, a new price target. They've already bought it. So you're not buying low, you're already fucked. And then when it goes up so much, they sell it. And you're sitting there in late, and then boom, and then it starts going down. You don't know why, and you're fucked. So you've got to be careful with stocks. This is why I recommend gold and silver. You don't have to worry about it. It's going to go down now, but it's going to go off the manipulation. And when that happens, you'll be fine. You're just going to go and let the thing run. And that's what we're at. So understand if it's price fixed or free market. You're better off probably in Rolexes and Mantle cards. I mean, you can go to a store. I have a PSA 1 Mickey Mantle rookie card that you probably can pick up at a show for $500 because the dealer won't know what he's got. It's going for $54,000. You're better off just going to trade shows looking for Mantle rookies in any condition. As long as you get a 1 on it, it's $50,000, and you pay maybe a few hundred for, maybe $1,000. That's probably the best investment I could tell you is to do that and buy gold and silver. So gold and silver, even though it's manipulated, you have brics buying it, keeping the manipulation off. In stocks, you really don't have a buyer who's buying, Amazon or some of these stocks. Who's buying Caterpillar, Ford, GM? Who's the buyer of it? There's nobody buying it. As the costs go up, and I love how stupid the car companies are. They want to raise their price. Ford's raising their price. Yeah, you'll attract a lot of customers with that. You can only do that if you have a monopoly. You can't do that with competition. I'll just go somewhere else. and somebody will be smart enough not to raise their prices. That's a lot of it. But day trading is very tricky. Again, you've got to have a company that's strong with kind of watching a chart, but understanding, is it price fixed or not? And in the chart, like with gold, it's easy. You can see every day about 10 o'clock, it goes down. And then it could be 10:15, 10:30, it goes up. And you can see the algorithm pushing it up. So I would recommend day trading gold because you can't really get hurt too much in it. But you got to be careful of the stock market crashing. So I would avoid stocks at this point. I've gotten out of my day trading gold and I just bought physical gold. Make sure you buy physical gold, not paper, not ETFs, not stocks. Buy physical, as I showed you those coins. 999, 1 ounce, half ounce, quarter ounce, tenth of an ounce. Just buy gold. You're just buying as much as you can. And it should all be priced the same. So when they price it differently from Cougarans to Eagles, that's bullshit. It's an ounce of gold. It's an ounce of gold. It's $3,300 an ounce. That's what I would expect for it. So if they don't want to give it to me, well, okay, I'll try Switzerland or Germany or another country where it doesn't matter. And eventually, when the shit really hits the fan and there's no gold out there, people will pay anything for gold. It won't matter if it's Timbuktu, they'll buy it from you. So I think that's about it. Again, in baseball, red hot. We got Philadelphia 2 units. The Yankees, we're going under 8.5 again. We'll see if they change and they're starting to hit. Tampa Bay under 8, 2 units. The 49ers under 8.5, 2 units. So Judge hit 2 homers. Basically what happened is the pitcher on the other team was so bad that they started to hit. They got 12 runs. The reason they've been going under, they've been losing 1-0 and 2-1 and 4-0. They haven't been hitting. And so that's what we're looking for, teams that haven't been hitting for multiple games, 2, 3, 4 games. Okay, now we're going to bet them under. But they ebb and flow. It depends on the pitcher, righty, lefty, and things like that. So we'll keep an eye on that. Later on today, I'm going to do the Big 12. I started studying that. I updated my spreadsheet to include 2025 and track the quarterback movements. So there's a lot of like Sun Belt and Conference USA quarterbacks who have moved on, like Joey Aguilar went to Tennessee. He actually went to UCLA, but Tennessee didn't want the volleyball player. And so they kind of traded, we'll give you him, but we want Joey Aguilar. And he would have been good at UCLA. He'll be better at Tennessee. I think they have a better offense. So that's about it. So gold, silver's 36, gold's right around 33. Tomorrow should be a big day, July 1st. We will see. And off we go. So have a great day. www.teaserking.com, Mr. Business 1222. Very happy you joined and good questions. That's what I want, are good questions. And I'm certainly not going to, there's nothing I won't answer unless it's a real strange, non-economical question, personal type of questions. So that's where we're at. Time for lunch. Then we go to the pool at, well, it's a little later. So I'll go to the pool about 3:30. So I got about an hour to recharge my battery. And that's it. So baseball, football, really no news. College football, really not much. NBA's over. I don't really talk hockey. It's too boring since Bobby Orr left. Buy your assets. Assets are things that are worth the value. That one guy couldn't explain an asset, and this other guy couldn't explain money. It's like these people are so stupid. Anyway, I think that's it. So Hope you enjoyed, and www.teaserking.com. Question, comment, anybody? You can get my email on www.teaserking.com. You want to ask me questions? Prophet, I haven't seen you in a while. Luke, happy 4th of July to you. Bobby, where the hell are you? Happy 4th of July. And that's about it. So we got football coming up. And so, like I said, I'll do another class on, I got the Big 12. I might redo the Big 10 because I put it in the middle, and now I'm just doing it. Like, it's going to be the Big 12 period. It's the ACC period, AAC period, SEC period. So I might do another Big 10 one. It's just there's so many teams, 17, 18 teams. Oh, my God. All right. Well, have a good day. Good luck. Go buy your gold and silver. It's got to be physical. It's got to say 1 ounce, 999, and you're fine. Some of them don't. The Krugerrand doesn't have the 999 on it, but we know that's fine. Any of those country dollars or country gold's fine. Britain, Australia, US, Canada, Philharmonic, Austria, and South Africa, you're fine with. I don't believe Switzerland has gold. I've seen some Russian gold, but I don't know how old it is and if it's 999. Be careful with that. Anyway, that's about it. So have a good day. See you tomorrow. I might see you later when I do Big 12. Depends how hot it is. I might go to the walk around the lake a little bit. All right. www.teaserking.com for the 19th time. All right. Take care, everybody. Have a good day. Stay safe.